c'est parti. Hello everyone, hope you had an amazing weekend. I'm with Pierre.
Hi guys, hope you're doing amazing.
I'm doing amazing. Hello John, we saw you in the chat. Same thing, hope is all fine with you. So we're going to go through our weekly analysis as usual. So some things happened through the weekend, or should we say after the weekend, and it's going to be interesting to analyze what happened and where we are right now. So first of all, let's go through what we have planned for today. So it's our sixth live session. So it's growing. We're posting some interesting content now and starting to have many different analysis videos. So if you haven't checked them yet, you can check them all on the Discord. It's pretty interesting. Take a moment just to read this legal disclaimer, because once again, what we're providing is really no financial advice at all. It's our trading analysis with Pierre mostly, the levels we're interested in trading. And if you don't know how to trade, and if you're using your own money, your own savings, I would really advise you to not use real money, basically, to trade with paper money until you're sure on your side that your own analysis and your own decision making is good and you have a proper risk management. So take a moment to read this, and then we will start shortly after. Yes. Okay. So what are we going to do today? So basically it's the same agenda as every week, but I just want to show it for newer members. We're going to delete every levels that we have on our screen, okay, and start from scratch. Do a quick analysis on the S&P. So as usual, this happens at the end of the stream. We're going to try to make it a bit quicker so we can have a deeper maybe analysis of the S&P, because it really is correlated to the Bitcoin. So it's interesting to see those key levels. This will allow us to formulate a trading plan for the week to come. So that has started basically today, and we will have a Q&A sessions, of course. If you guys have any kind of questions, we're here to answer them. Okay, so let's go. So this is the chart that we had during our last live stream. So this is where we were basically. Okay, we're at this level. Let me just remove. It was the 3rd. Okay, no, it's a bit. Sorry, it was the 3rd of January. Yeah, around this level here. We analyzed that here we had a very interesting pocket that we wanted to long. I remember at this time the different setups that we had. So we had a short from the highs here, our very interesting short, where we said, okay, you have some liquidity above those highs, and we were here and we were expecting a move up to take this liquidity and then potentially have a very nice short setup with this single print. Why not this single print area to be filled? So that was a very good setup that we had in mind. We also had different long setups. So the best one so far, and it's still the case in my opinion, would be from the daily level at 15,300. So we're very far away from there now, but this is still, in my opinion, a very good level. We're still totally range bound. This is very valid. We haven't hit it yet. And another long, which also didn't happen, because we never took those lows. So still valid in my opinion. The levels are still there. Another long at 16,200. Okay. So yeah, let's see what happened during the week. I'm going to keep actually all those setups on, and we're going to see what happened with an accelerated view. So we range. Okay, interesting. Very interesting. We took the highs. And look at that. So this is interesting because this is the setup that we had in mind, okay? And the idea was that we take those highs, so we ended up taking those highs. So that was actually interesting to have the hint that there is liquidity above and price is going to be attracted to it. But what we wanted to see was actually take the high, lose those highs, and then a market structure change, and then you start dropping, okay? If you go on the lower time frame, and I'm going to be honest with you, I took that short. I took this short setup because on the very lowest time frame, you had this SFP move like, okay? And I'm going to try to show it to you here, Okay, so if I just put this right there, you see this wick right there? This was the SFP, okay? And so for me, I don't even question it. When I see this happening, when I have my setup that's in mind, and I know that this is a high and a bit above there's another one, and those two highs, I want to see them taken out, and they are taken out, and then you drop, okay? I enter my short. Why? Because the invalidation is so close. It was really, really so close. I'm going to show you how much you risk with this trade. 0.26%. That's nothing. But you have to be quick. So as soon as you see that the price goes above and then you drop below it, this is where I entered my short, okay? Now, I had in mind many different things at this time. First of all, I wanted to take profit at the, I think at the VWAP at the time, yeah. I wanted to take profit at the VWAP. So if we maybe zoom in a bit more, I'm going to take you exactly through all the steps of my trade. So I entered the trade here, and at this moment in time, let's go on the 3 minutes maybe. Yeah. At this moment in time, there was no market structure change. So it was a very aggressive entry, but as you know, SFPs are aggressive entries by the nature of them. So you enter the trade and you set a take profit at the VWAP. As you can see, we never hit that VWAP. So what happens next? You start grinding up, you make a higher low, okay? Right there. You start going back up here, another higher low right there on the very low time frame. So this, when you're in a short from this position, first of all, you're getting closer to your entry. And you should think to yourself, okay, I don't see a market structure change on the 3 minutes. Let's see on the 1 minute what happened. Look at that. Even on the 1 minute. On the 1 minute, you do a lower high, but you do a higher low as well. Lower high, another higher low again. And then you keep on grinding up. So at this moment in time, this uptrend that we've been in since for a while now, since the beginning of the year, right? This uptrend that started here on the 30th of December last year, actually, this uptrend is not invalidated. We're just making higher lows, higher lows, higher lows. It's true that it hit our setup here with the SFP, okay? So we take the trade. Locally, we were checking this price action around here. We take the trade, but we keep in mind that the uptrend is still in play. And when you see that even on the lower time frame, there is no market structure change at all, why would you, it's here, sorry, yeah. I mean, you take the trade, it goes up here, it takes you out of the trade. You shouldn't enter back in the trade unless you see this level lost again. So, true, you lose a trade, 0.26%. It's nothing. It's really nothing. It's peanuts. It's double the fees, even less than that. But in the end, should the price drop at this level, because it was a really, really nice confluence level for a short setup, you'd have been protected and you'd have made pretty nice profits, because this trade, you could have taken this trade at least to a 5% drop, you know, to take the lows. You take the highs of the range and then you take the lows of the range. Let me show you here. You take those highs, right? You short it here towards where you do a rotation of this range, and then you take those lows. So that was the idea behind this trade. So it didn't go as we planned, but in the end, because of risk management, this is a very, very small loss. It's really, really small, so it's fine. And this is what's nice about trading, and that you really, really need to understand, is that you are going to lose some trades. But the idea is that when you lose those trades, you don't lose much. You need to really minimize those those losses and make sure that when you win a trade, you win big. And I'm going to show you what I mean by win big, is that I'm in a long now personally since this drop right there. We dropped here, and at this moment in time, I was in a short, and I decided to take a long here to do a compound long because I saw that we were going up. Actually, it was not a compound long because I didn't have a long to begin with. But I saw that there was an uptrend. And now this long, I kept it open and open and open. And so for now, my entry is at here, around here. At this moment in time, it was a 2% trade, and now it's a 2.8% trade, okay? And this one, I'm keeping it up. So from one side, you lose 0.26%, but from the other side, you keep trades where you have at least 2, 3, 4% gains. So you see the difference between cutting your losses pretty fast and keeping your winners really ride as much as you can. Okay. Now, to go specifically to this long, I personally took profit around this value area high this morning while I was talking with Pierre, because of course this is a high time frame level, a high time frame area. Should we reject from this area right now, it would be completely understandable. We are still range bound between this level here and the lower value area low. So this is an area of take profit in my opinion, even maybe open a short, but we're gonna get into that later on, okay? So yeah, basically this is what happened last week. We just went up, blasted through the short that we wanted to trade. So I personally took it, lost 0.2%, not a big loss, but on the other hand, the long is making money now, so I'm just keeping this one right, and it's compensating all the losses. Okay? So now that we've been through what happened last week, let's erase all our levels and let's do it from scratch, because now the levels have changed. So it's interesting to actually see. Okay, let's take that out. You know what? Let's take everything out. Okay. We said we're going to do it from scratch. Let's do it from scratch. So, as usual, what we do first is we go for monthly levels. Okay. We don't have a new month that has opened since last week, so the levels are still the same, but let's put them again. To the high side, we have one at 20,000 right there. Okay. Even higher, we have one right there. To the lower side, so there is a potential monthly here that could arrive, but we are still making this candle, this green candle. So you cannot put this right there. You have to wait for the closure of the January candle. Okay, we're still at the beginning of Jan, so this is way too advanced. But you can already think to yourself, okay, should we close above 16,500, and right now we are above that? Should we keep this level as a support and we don't even go through it anymore? This could become a monthly level, a very good level of support, but we are still 20 days ahead of this, so many things can happen in 20 days. Okay. So we have this monthly level right there, and then we have another one here and another one below here. Okay, let's keep those. I'm not going to mark the upper ones as well, because between this and this, you have 47%.
We're not there yet.
I mean, we're clearly not there, so it makes no point in marking those levels right now. So let's put this here. I know we do this every week, but it's by doing it a lot that it becomes a habit, and it's the best way of trading in my opinion. Okay, so now in terms of so I changed to weekly levels. What are the weekly levels that we have? We have a weekly right there. Everything here, nothing has changed compared to last week. You have one here. We have one here. We have one lower there. So that's interesting.
This is a new one.
This is a new one. Yeah, sorry, I was a bit fast.
Yeah.
That's a new one that was created at the beginning of this week. So that's a new weekly level that we can play with. Okay, and that's a support at 16,590, which is a bit aligned with this monthly level that we're expecting. It's really a bit above. So already on the weekly level, you have a support that has been created. Okay, so it's interesting. This is already a support area for sure. Here you have nothing. And so to the lower side, what do you have? You have here a weekly level that was untapped. You have another one right there. Okay, you see that?
Even those one, we are not that. This is not a closed level. So
this is, yeah, I mean,
10,000.
Exactly. and we have the monthly levels that even go low. If you see, those are also monthly levels. So honestly, those levels are not going to be hit, I think, this week, but you never know. You could have like a black swan event, huh? Could happen. But yeah, I agree with you, Pierre. This is a bit,
let's wait for the CPI.
Let's wait for the fundamental news. Okay. Now, on the daily level, the most important one for me, okay? You can see clearly here this range, and you can see that now we're inside of this range right now, and we're grinding up, okay? We haven't left this range yet. So it's true that since beginning of this beginning of Jan, end of December last year, beginning of this year, we've been grinding up. But actually, when you think about it, we're still inside of this range. So there's nothing has changed. We're completely range bound. We hit the value area low. Okay. I like this view with really no tools whatsoever because it gives you a very clear understanding of what's happening. So you have this range. We hit the lows once, twice, the value area low, the volume low, call it that way. And we confirmed above the point of control, the highest volume level of the whole range. And now where are we? We're at the value area high of the range. And we're grinding a bit up. So we're even higher than the value area high right now. Okay? So that's what's happening. Until you break this range, right? Until you take those highs, until you take those highs, you backtest them, show that this is now a support area, and then take the highs again, okay? Until you do this, for me, you're totally range bound inside here, okay? And so here, this is an area of resistance, okay? You're gonna have others, little areas of resistance that we're going to cover later on. But let's say that now we are at one of the key areas of resistance, basically. And the other one is going to be like really the highs of the range. And until you claim all of that, I honestly wouldn't be that bullish. I would be completely no bias. Really, I would have no bias whatsoever. For me, we're in a range.
Neutral.
Exactly, completely neutral. I can take a short. Of course, I'm not gonna long here. I'm gonna be honest with you. I'm not looking for a long in this area. You look for longs in this area, okay? You don't look for longs in this area. In this area, what you want to see, if you want to take a trade, or at least let's call it a swing trade. If you want to take a swing trade in this area, for me, you have to wait to see some kind of a weakness and then maybe enter a short. But entering a long here, when you could have entered it lower around this area, if you enter that, I mean, you're talking about a 5%, you're buying 5% higher than the lows where it's really, really interesting to open a long. So, I mean, it's a bit too late for me. It's really a bit too late, and I wouldn't advise opening longs in this area. But then again, you do what you want with your analysis, with your money. But personally, I know I wouldn't open a long here, and I know Pierre wouldn't as well. So,
no.
Let's keep on marking our daily levels because this is what we were doing. We have a daily level right there. So you see, this is one of the resistance I was talking about. It was created on the 15th of December, and since then, totally untapped. So that's a level that we should have marked. We have a new daily level right there that was created during this uptrend that was created yesterday, basically. You have another one here. Oh, look at that. They're just piling up. This one was front run, so it was not tapped. Lots of daily levels, huh? This one, same thing, front run as well. Okay, that's very interesting. And now here you have nothing.
Yeah,
and
they are stacking up.
Okay, so that's interesting. That's interesting. We're basically reclaiming all the resistances. We're creating lots of supports below us. And now above us, what we have is the value area high, where we are right now, basically. You have the Fibonacci 618 retracement. Potentially could be an area of retracement. The 0.5 as well. And you have the daily level, which is here. But that's it. That's about it. That's the resistance that we have to claim before we can start actually thinking to reclaim this area right there, you know, and enter back into this 19K, 19,200-ish area. Okay, that's good to know. So we have daily levels here. We don't have any. Yeah, we have this new weekly, no monthlies, of course. And yeah, that's about it. Let me just mark this one as well. And for the sake of it, because we know that we have our, because we have our favorite setup that is below. I'm going to put this one as well up. See this level. I would really, really like to see this level hit at some point. 15,300. Just to, yeah, 15,318. Because I want to see those lows taken out like a big wick, you know. For me to be confirmed that this is the this for me is really, really ugly. I would love to see like a You see, something like that, with a big wick that takes everybody out. Everybody that has stop loss out, and then you reclaim the daily, and then you can go high. And this would look on the higher time frame. You see those kind of big wicks, you know, those kind of wicks. I want to see a big wick before you can envision like a push up, a real big push up. Okay, and right now we don't have it. Right now it's a double bottom, so I'm under the impression that we can still drop. We're still range bound. We can hit a resistance here, get a rotation towards the lows, challenge those lows, and maybe again then get our big move up. This is how I'm feeling personally, but nobody cares how I feel. Basically, you have to see what happens on the charts. So this is daily. Okay, so we have our dailies, we have our weeklies. Should we mark the, yes, we should, the volume levels. We're going to do that. I'm going to show you how we do that. So the idea is to go to an order flow, basically, software. We're using ExoChart. It's a pretty cool one. You have other alternatives. One is called ATAS. It's free. I know that TradingView doesn't provide any kind of order flow analysis, so that's the only issue with it. You can use TradingView for the straight like charting analysis, but you cannot really go deeper into the volume and the orders, the market orders that are entering. So you just have like part of the picture. You don't have the full picture. 16,937. That's our first level. I think it's right there. So what I'm marking now is called the naked point of control. Okay. And naked point of controls are basically high volume areas. This is a daily one, so that's a high volume area that was created last day, and it wasn't tapped anymore. So people here are on the wrong side of the move. They shorted, and they're waiting for the price to go back there to get out of their short. So you know there's going to be a buying pressure. 16,787. So we are creating some 16,787. Let's put it here, right there. Okay. And then you have this one right there, 16,637. 16,637. Okay. And wow, so many daily naked point of controls, huh? 16,512. 16,512. And then this one at 16,437. It's crazy. 437, where is that? Ah, it's below. Okay, more or less. Look at that. We have lots of daily naked point of control, and most of them are aligned with the daily level. It's crazy. It's I've never seen that. So basically, we've been creating supports areas. We've been creating market structure support areas on the pure purely from a market structure perspective on the daily level. So a good time frame, right? Low to middle time frame, so you can take day trades off of it. And to add to this daily level market structure, you also have a volume. You also have volumes that are really, really close to those levels. So honestly, I would say that each of these levels can be treated as mini support areas. Okay, each of these levels, you can see them as areas to take trades of them, really. But of course, you're not going to do that because you're going to analyze which one is the most interesting one. Okay, look at that. Oh,
Probable.
Exactly. The idea is not to enter in every single level thinking, okay, I have it. The idea, oh, here was a mistake. Right? You're not going to enter along every time you see those areas hit. Okay, the idea is to think, okay, what's the most probable one? And so you're going to add a bit more analysis to this. to see, okay, this one could be a nice idea if we're still in this uptrend. Maybe we can compound the long if you're in a long from lower. Could be a nice idea. This one maybe less because there's nothing else. This one, okay, there's a point of control. This one. So this is how you can start building a case. But so far, those levels are support levels. This is what they are. And we have to treat them that way. Why am I keep on creating those things right there? Okay, so those are naked daily points of controls. I'm gonna put also the naked weekly point of control because we have a new week. And I know we have a new one, and it's right there. Okay, 16,812. So let's go on the weekly time frame. 16,812. Okay. So you see, out of the blue, this one already has a bigger time frame volume level. Okay. So if I had to choose, for example, between this level and this level, I would take this one because there is one confluence, an additional confluence to it. And this is how you can decide which ones you want to trade compared to the other ones. Okay. So I'm going to remove all this. We don't have a new naked monthly point of control. And we know that compared to the weeks before, there is no other important level. Actually, maybe just for the sake of it, I'm going to add, though, the previous month naked point of control to show you the respect it had. Actually, to see the respect it had, because I want to be convinced as well. Interesting. So that was the last month naked point of control. And this month we started, and we're exactly, the point of control so far of this month is the exact same level than last week, okay? And so we had a naked monthly point of control at 16,812. Oh, wow. Okay, we're recreating this level. So that's very interesting. That's very, very interesting. So to put you so that you can understand what's happening. Last month, we created, once we closed the monthly point of control, the monthly candle, sorry, we created something. We created a naked monthly point of control. Let me explain to you what I'm talking about. Okay. Sorry. Actually, I'm going to do it like that. Okay. December. Okay. So that's what happened. Okay, this, I'm going back to the 5th of December last month. We created here a monthly point of control, okay, at 16,812. Okay? And so we played around this level. Let's go maybe on the 4 hour, okay? Look at that. We created the level, and look, it was support. Play around it, still a support. Let's see if we lose it. You lose this level, you lose it. Okay, wick, actually you don't lose it, you just wick below it. You see how this was an amazing support line? Okay. Let's go a bit faster. That's a very high time frame level. This is why it's interesting to see how it reacts. Now we have more data. Okay. So it was created here. It was a support. Support. You go through it. You see, you're still playing around. Okay, you lose it, and then it becomes a resistance. Resistance. You see, and that's okay. That's so cool to see. A big high time frame monthly point of control was created here. So this is a level that you should have marked. Okay, it's a support. It's a support until here. It's front run. Until it's broken, and then what happens as soon as it's broken and you start confirming 4 hours candle below it, it becomes a resistance. We're fighting against it. Let's see what happens next. Resistance again. You see that? You play around it.
Yeah.
And you just can't confirm above it yet. We know that we're going to go above it because of where we are right now, but it's very interesting to see the respect of this level. Support, resistance, trying to go above it, and maybe now we claim it. Yeah, 7th of January, and this is when you claim it, okay? So no wonder this level has been recreated, because we've been playing around it for the past, past week, and even the past month. So basically, this level is very, very important in my perspective. It was created here as a
Yeah.
support on November, and now it's recreated as a weekly naked point of control from last week. So this is a very, very important level in my point of view, okay? So I'm going to remove it from the monthly level because it's been tapped already and played, but we have it under the weekly level, which is right there. And because of that, I'm going to remove the naked daily point of control right below it, just to keep in mind that this is the biggest one, okay? So what do we have so far? So we have our range, we have our daily levels. We said that we have confluences with our naked point of controls, okay? This one seems pretty interesting. This one looks like it's lining up with the 618. We're going to see that later on. The weekly level, okay, so this area, sorry, my bad. This area here is also very interesting. Weekly level, so that's a strong pivotal market structure area. Naked point of control, daily level. And monthly, we have nothing. Now, let's add a bit of Fibonacci work. Actually, before the Fibonacci, let's add a bit of fixed range. Maybe fixed range first, okay? Just to get an idea of where are the good levels in terms of pure range. So we had this question in the Discord. John asked, okay, how do you pull your fixed range? Because we do them very fast, okay? So I'm going to explain to you very quickly why I pull it from here. The idea of the fixed range pool is that you want to cover the price action included in a range. So the first idea that you should have in mind is, what is the range? Where is the range? Where was it formed? And for me, this range, in my perspective, was formed when we were dropping. And as soon as you start seeing a sign of strength, okay, you see this green candle on the 4 hour? For me, this green candle shows you, okay, here you're dropping, big drop, and then a sign of strength. For me, this is where we leave this previous area, okay, you're below it, and this is where you should start your pull from the next area. So it's a middle to high time frame pull, I would say, because it's a 4 hour candle, and you have multiple 4 hour candles here. You're talking about, since November, so 2 months now. And so I would pull it literally from this green candle on the 4 hour chart to the level where we are right now. Okay, so you just extend it to here. And this is how you pull it. If you want to do the same exercise with
this is one, not the textbook.
No.
This is not the textbook way of pulling a fixed range. Huh?
Pierre is right. You could have multiple pulls, okay? The more textbook one would be, where's the bottom? The bottom was put in here. You have the green candle, so you could say, okay, this is where you can, and this could be a good pull as well, okay? And look, the value area low is well respected, but for me, you're missing this price action, this strength that was in here, and maybe you're missing interesting levels. If you take this one now, look at how this is respected. Value area high is very well respected, okay? Value area low is the same, very well respected as well. And now we are at this value area low. Should you take this one now, I'm sure it's going to be good as well. But you see, it's a bit less like you play a bit through it. Okay, so I prefer the original pool. Plus, you include more data, and data that is really valid, because this so far is part of our range. I mean, we hit it. It's the high of the range, and then we dropped. So you could say, you could trace actually your range like that very easily. You could just put your first high here, okay? That's the high. That's the low up right there, and that's your range, okay? And by doing so, let me just remove, okay? And by doing so, you know that you have to start your fixed range pool here, because you want to see what happens inside of this range. Basically, that's it. That's how we do it. So
take a look at the respect of the middle channel here.
And
it's amazing.
Yeah, it's actually true. So okay, so we're going a bit ahead in terms of indicators, and I think at some point
Yeah.
we should make like short videos on how we use those indicators. But by drawing this channel right there, what you want to see is, of course, you want to have pivots to the top, to the low, and you want to see how the middle channel is respected. Okay, and here, so the middle channel is this dotted line. Okay, it's basically the 0.5 from the lowest point to the highest point. And you can see the respect. I'm just going to highlight them from you, but you can see the respect like around this area here. You can see the respect here. You can see the respect here. Here it was a support. It was a bit played through, but you see, so it is a respected line. Here there was a range that we formed around this area. Okay, but when you get actually far away from it and then you revisit it, it acts as a resistance if you're below it, and probably should we now go above it and retest it from here, it's going to be a support level, or it's going to provide a bit of a support level. And this is what you want to see when you put your channel. Okay, some could also argue that maybe your channel go from here. Okay, and this is also a respected middle channel, with this part of the section now really respecting this middle channel. So I also like this pool, but because I like to have higher levels, let's say a bigger amplitude of levels, I'm gonna keep this one on. Okay, so that's the channel inside of which we are right now. And to go back to the fixed range pool, that's the fixed range pool that we have. Okay, and immediately you can see that you are at resistance. So let's mark this down. That is our value area high right there, value area high, and you have the value area low that is right below here. Value area low, and the point of control that is here. Something interesting about the point of control is that you have actually in this volume profile, it's not really a double distribution, but you have here the point of control, and you can see here that you have a spike in volume. Okay, so you wouldn't call this a point of control, but up until some point it was a point of control. Maybe let me try to explain my point. Oh, well, right there. Actually right there. Okay, right there you see that this was actually the point of control. So this level that we marked, it was a point of control before that, then it shifted to the higher side when we started doing this deviation above, and then when we dropped again, if I add a bit more now, you will see that it's going to shift to the lower side at some point, and that's where it shifted. Okay, when we started the price action around here, more volume entered at this level, and now we went back above, and it's still at this lower area. So you want to have this level, in my opinion, you want to have this level as well marked on your chart. And what a surprise, it's exactly the naked weekly point of control. Okay, so we're starting to build a case around this area. So HVN, high volume node. Okay, that's how I call it. So this is the volume profile, VP, of the range. And basically, and this is the channel, so we can remove that now. We have our levels that are marked. And we can add, so the daily levels, the weekly levels, and now let's see what stands out. So you have two areas that stands out, really. This area right there, okay. And for me, now it's a bit tricky, because all those levels are not really aligned, but you have this huge area of support where you're going to be hitting one support after the other. Okay, so the idea is to take the best one. So we're going to add a bit of fit pool to that, and basically that's how you create a case to what is the best level. Okay, and right now I'm starting to have a very cool a good idea. Am I on the log scale? I am on the log scale. Okay. So I would say first big area of support from all those levels that we've marked, okay, inside of this range, should we reject from this value area high, so we're talking about like a drop from here, the first big area of support, in my opinion, would be this area right there. So 16,800 to, 16,800 to 830. This pocket right there, for me, is going to provide some kind of a support. Now, is this a long entry? Could be. Depending on the reaction, it could be. What I don't like about this area, I'm going to tell you frankly, is that we went through it pretty fast. Like when we went to the upside, it went, so you have a little consolidation here and then up. But here you see the swift move to the upside right there. So we were consolidating around this area. This is when we created the naked weekly point of control. We dropped and then swiftly above it. This makes me feel that once we revisit it here, we might drop pretty fast. This is why you have to see the reaction here. You need to see something like going here through it, maybe lose it for a while, failed auction, higher low, and then maybe you can enter, for example, here. Once you see here that you have a nice reaction, that you have a low that's in place, maybe you enter a very low risk to reward, a good risk to reward trade, and you can maybe enter a long around here, okay? But I would need to see the reaction, because should we drop from here, the counter argument that you can have here is that you basically went from the value area low to the point of control to the value area high, and now you're dropping from the value area high. So what's the next move? Point of control. So why would we stop here? From the higher time frame perspective, this level could be lost and you can go to the point of control. That's right there. Okay? So that's what you have to keep in mind. First area here. Second area, what I really like is that you have three different technical tools that are being aligned here. You have a daily level. You have a naked point of control. I'm going to show you right there. Naked point of control. 618, 65 or 66 percentage area. So that's a very, very respected area in the Fibonacci world, basically. And you have this low. Okay. So the price action could do something like that, you know, here maybe a bit. Actually, let me do it again. Like if we were like completely respecting the technical, you could see something like that, a bit of that, and then why not drop here, and then you have a move up. Okay, this could happen, and this would be completely technically accurate. Okay, you have a bit of support here, you have a bounce, you can scalp something, you go here, you play around this level, finally it doesn't give any kind of support, you didn't see the reaction that you wanted to see, or at this point in time when it's starting to go up, you see that there are bearish divergences or anything, so actually this trade, you get out of the trade or you get stopped out, and then you drop to this, you arrive to this area of support here that you have analyzed from before, and you know that there's an interesting low right there. There's even this low right there, okay? And what's interesting about this one is that actually you could have a deeper dive into this thing. You could actually envision something like that. Okay? And what would be cool about this is that, first of all, everybody that's trying to long the 618, 65 area is going to get out of the trade, because it goes deeper into it. Where does it go? It goes towards this weekly level, which is a strong level, okay? It takes out this liquidity right there, and then you start pumping again, okay? So the way you could trade this is either wait for the swing failure pattern of this area and then reclaim the weekly and you enter at this level right there, okay? Or more aggressively, it's really going to depend on the reaction, what you see at the moment on the order flow. Or more aggressively, you enter in this area and you put your stop loss below this level. But this is risky, because should you have like a deeper retracement, you don't know where the retracement is going to get. Maybe it's going to hit this point of control area before it bounces back. So this is why I'm saying it's a bit risky to enter this right. I mean, if you see like a strong move down, I would be very cautious about longing here because of all the confluences. you have a very good case, but you also have a very good case to go lower. So that's going to be, in my opinion, that's going to be a tricky week. Because finding the support, it's going to be basically having a confirmation from the chart, either from the market structure or from the volume perspective. What you can say for sure is that this is going to be a support area where you can scalp something from it. This has a support potential, but should you get here, keep in mind that you rejected from the value area high of the range, and the point of control is really close. So one would expect actually the point of control to be hit. So my point is, if we start losing this level, backtesting it, coming here, I would monitor this reaction right there, but I would also keep in mind the scenario where this is lost and we actually go and hit the point of control and play around those levels. And then maybe see here some kind of a consolidation because it's a point of control, and then a pump. Why not? Okay? So it's I'm not gonna lie, it's going to be a tricky week, in my opinion. I don't know, Pierre, if you have another idea on that. But because those levels are so, they're not like packed like
Stacked.
here. Yeah.
Yeah.
It's like,
They are stacked to the downside.
so.
And one would say that once you have that many, you really need to have that much confidence to even get in the trade and
Exactly.
look at the order flow and take the decision in the moment. You know?
Exactly. And keep in mind that we're talking about middle time frame to, let's say middle to mini swing time frame trades. Okay. In terms of scalping, that's totally different. In terms of scalping,
Yeah.
I would even be interested in scalping this level, to be honest.
Yeah,
In
it's
terms
fine.
of this is a day trade level. This right there, I made it sound like we can go through it directly, but you had a consolidation at this area, okay? You could see something like this and then drop, okay? And this right there, even though it sounds like nothing, that's okay, it is nothing. It's definitely nothing. It was nothing, my bad. But here you can expect maybe, because you see this amplitude of the range, you could see something like this, go back to the highs, and then drop, okay? And you can trade this, and this is going to be, I think, 0.4% from what I saw. Yeah, 0.5%, okay? But
Yeah,
but this is
that's nice.
so this is why I'm saying this is a scalping territory, okay? This is not a swing territory at all from my perspective. So if you want to take a trade here, you have to take profits pretty fast because it means that you're rejecting from a high time frame area level, and that potentially this is gonna get lost. This is gonna get broken, completely broken. Okay, that was funny. That was funny. It's like, yeah, this bounce you could think it's nothing, and it is nothing. It's literally nothing.
I'm watching you smile on the stream. That's why I'm laughing.
Okay.
All right.
So because we have so many levels here, if you had to ask me which one I would take, to be honest, I would take the higher time frame level. And what is the higher time frame level? It's 618, not really. Daily level, not really. Daily naked point of control, not really. Weekly and point of control, yes. So actually what I would do here is I would take the 618, see where it goes. It's lower. I would remove this. I would keep in mind that there's an area, but actually the area where I would be really interested in maybe adding to a long would be here. Okay? And this is just because I know that those levels are higher time frame levels. Okay? This is basically this area right there. This area right there. It's exactly the same as this one. It's the same thing in terms of confluences, same thing, only a bit lower. And only also the difference is that should you arrive to this area here, it means that this uptrend here for me is no longer in play because you took those lows and potentially you're going to take those lows. So you're totally range bound, nothing has changed, and potentially you're going to go lower. So this area is interesting because there's the 618 that's around it. So you can monitor this and maybe scalp a trade off of it, or even maybe get an amazing trade off of it. But in my opinion, the best trade would be around this weekly and this point of control, with maybe even a deeper retracement like this, you know? And then you decide where you want to enter. You can either enter at the point of control, enter at this daily level that's below the point of control, hoping for a retracement above it, but here you're very aggressive. You can wait for the reclaim of the point of control to enter, or you can even wait for the weekly level to be reclaimed to enter, okay? And this maybe, if I had like to take a decision now, which one is the best, I would say this is probably the most interesting one out of everything in this area. This is probably the most interesting, the best trade setup you could come up with, okay? Because of the context. Because you're dropping from the value area high. That's the only reason why. You're range bound, dropping from the value area high. What is the next logical level? It's the point of control. Where do you want to see this level go to, the price go to? The point of control. Why would it come here? And when you know it can go a bit deeper and take the liquidity that's been piling up below, piling down, below those levels. So the bigger case would be this area, right? And personally, the way I would trade it, I would like to see a reclaim, a loss of the point of control and then a reclaim. That's how I would trade it. So it will look something like this, in this way, okay? Basically, you would take it back to the value area high, potentially a 4% trade. And this is already oh, sorry, so okay, it's okay. We have those two trades then. Okay. And so in my opinion, those are two completely different trades. One trade is telling you that you are potentially heading lower, which is this one. This trade here is telling you, okay, the point of control is providing now a support. You should take profits pretty fast, in my opinion. You should take profits either at this daily level right there. Daily level could be a good idea, or you should see what the market structure gives you when you're going down and maybe take profits at support resistance flip. That could be very, very interesting as well. Or you could also think to yourself that if this is lost, what is the next level where you can go? Well, it's our level that we've been waiting for a while now. And in my opinion, it's the same level than last week. It's this one right there. That would be the next big trade for me. Because why? Because you would have done a full rotation of this value area range. You arrive here at the value area low. You have this liquidity that's been piling also around this area. You take it down finally, and then you go back up and you stay totally range bound. And then you have your long entry right there. And you're coming from higher. So you have the strength to go down. Okay? Because people are going to get the wrong move, wrong trades, and it's going to give us the good strength. In my opinion, this is how it can play out. So, okay, I agree with you that basically you're saying to the three different places to long. The best place of all those three is this one, by far, because you're longing lower. For the simple reason, you're longing lower.
And it has the most potential to go higher.
Exactly. Everything that happened in here, every people that entered longs here, not everyone, but many people that entered longs here, they've put their stop losses below those two lows, even here or here. Okay, you have some liquidity below this. It can be the local bottom. It can push even higher, but if you're asking me what's the best setup out of those three, it's this one. Okay, in terms of a swing trade, in terms of risk to reward, this one has a 6% winning rate. 6% potential rate. For a 0.6, 0.7, you would have to see where the wick stops. So you have a 10 ratio, 10 risk to reward ratio. That's amazing trade, okay? This one you would have to see where the wick stops so that you can put your wick below it. It's a 7, yeah, let's say 8. It's an 8 risk to reward ratio, so it's not bad. And this one is for me the more day tradable setup. You would have to see where also the wick goes down because you would have to use it, or you go below this wick, and then it becomes less interesting in terms of ratio. You can see it; it's 2.67. So yeah, in terms of longs, those are the areas I'd be looking for. Simply because we're in a range, you have this intermediate level, you have the point of control, and then you have what's below the value area low, which is the daily level, right there, that we've been waiting for a while now. That's going to be a very, very interesting week. Okay, so that's the downside.
Yeah.
Okay, now we spend a lot of time for the downside. What do we have to the upside? That's what's interesting now. Do we have something above us? Yes, we have the daily level. Okay, weekly, I'm going to remove it. We don't have it right now, and that's it. So to the upside, and that's where it gets interesting. What do we have? We just have that. To the upside, yeah, you have the 786 and the daily level. I'm going to put the 618 and the 65. That's it. That's basically what we have to the upside in this range. Okay, so honestly, if now we were to see this value area claim, backtest, and then rise up, okay, this could be a resistance area that could provide like a decent drop. But is it going to be the best trade setup here? I don't think so. The only confluence that you have is the 618 and 65 area. You do have something more. You do have this little high right there. Okay, could be, because you drop super fast, you rise super fast towards where this high 618 could be a decent day trade. This could be here, right there, a decent day trade. But keep in mind the context. You've been grinding up since the value area low. You reclaim the value area high. The odds that are maybe that you're going to hit this daily level or even take those highs. You know, this could happen. So should we reclaim the value area high, I would see what happened at 618. I would clearly not set any trade here. If I see like a wick, a big wick here, maybe hit the daily level and then immediately close below, I would probably enter a short. Probably. But honestly, if we reclaim this, I wouldn't see this being the top. Maybe the daily level could provide, but I would see this area taken. Yeah. I would see this area taken, and so also you have this. So let me just put them down. It's the high of the range. Huh? You would have this high right there. You have this high right there. Okay. And so I would see either this high taken or this high taken, and I would treat them as swing failure patterns if I see the reaction. If I don't see the reaction, so let's say you go here, you grind, you value area high, you take it. Here you have a little react, and then you go here, maybe you play around it, you go here. When we arrive here, if I see something like this and then like this, I might enter a short here because it's the extreme high of the range. That's the best short you can have in the whole range here. This is the best short you can have. Stop loss above that, you take it to the lows. Okay? If we start reclaiming this value area high and there is no big reaction at 618 and the daily level, this is what I'm seeing. So big ifs, but honestly, there's not much more of a resistance. We dropped super fast here. Okay, so there's no reason why we couldn't rise that fast and take those highs, in my opinion. But for this to happen, you need to reclaim the value area high and those levels of resistance that are there. So we need to reclaim. Okay, now what would happen if we don't see any kind of resistance and we don't see any kind of swing failure? The same way that happened here, basically. If this scenario that happened here where you just go through it, and you don't have like a decent retracement with the market structure, if you do the same thing here, well, you just don't short, basically. You try to short it, you lose the trade, it's okay. It's a small loss for an amazing potential win, okay? You lose the trade, and then you're up onto your next level. And so now we're gonna see what's the next level. Should we leave this range, okay? Because it's a possibility. We can definitely leave this range. I'm just removing all the brushes, okay. Now let's see what would happen should we leave this range, because we're going high. We're starting the year with an uptrend. If we go higher, what is the next big level of resistance above those levels? Well, first of all, what you want to do is take a fixed range pool of this range, right? And the same thing we did for this one, we're going to see, okay, where did this range, let's go on the daily maybe. When did this range form itself? I'm going to remove every lower levels, because now we're going to see what happens inside of this area. Because what we're saying basically is, should you get acceptance back into this range, where is the next resistance? So you want to map the levels of resistance of this previous range. That's what we're doing. It's very logical, very easy to understand. So what you want to do is take a fixed range from, so here you're dropping, at the first candle right there, even here, but I'm gonna keep it very academic. At the first green candle here, I'm gonna pull this right there towards here, okay? That's my fixed range pool for this area. And so here you have the point of control that is really, really, really close to the value area low. So I'm gonna keep the point of control. I know the value is just below it. I'm just gonna keep it just to not have a very crowded thing. So point of control right there. Do we have a daily level? We have no daily level. The next daily level we have is here. So it's higher. And then the next one that we have is even higher right there. And that's it. No other daily levels. Do we have maybe a weekly level above? We have multiple weekly levels. Okay. Let's mark them pretty fast. We had them marked. Wait a second. No. But we had the weeklies. Okay, good. Yeah. Let's remove that. Okay. We had everything marked. So basically, what we're seeing here is that you potentially have, that I remember. Let's remove the 786. The next, should we reclaim the highs of the range, okay, and we see no reaction whatsoever at the highs, let me put the range back. Should we so basically do that and reclaim that and back test it as a support? The next area for me is this one here. Okay. Now this area is going to be make it or break it. Why? Because of that. Oh, my bad. Because of that. You see this move right there? This move was really, really, really fast to the downside. So in my opinion, if you don't see any kind of resistance here, wait for higher levels. Honestly, I would see a resistance because it's the point of control of 6-month-old range, 618 of the whole drop. It's a big area. It's a big area, and you're trying to get acceptance. And every time we try to get acceptance in this range, we got rejected. So you're trying to get acceptance for a third time inside of this range. It could happen, but we never hit even those levels. What will happen when we hit this massive selling area? When we know that there is a selling pressure that's going to occur here, what's going to happen? Are we going to drop super heavily and resume this mega bearish trend line that we've been having for a while now? We could, because so far we're still into this descending, the staircase to hell, basically. Nothing is showing us that there is any kind of strength in the market, except from this little uptrend that we have. But what is the strength of this move compared to all that? You can't even see it. You can't even see this wave when you zoom out. Okay? So keep this in mind. Keep in mind that you're still in a very, very bearish trend. This is a high time frame visible level. Okay? It's the point of control. Actually, I'm almost sure that it's also the point of control of the whole thing. Yeah. So if you include this range and this range, the value area low is pretty much the same. The point of control is the same. So this is going to be a big area of resistance since June 22. So if you ask me, I'm not expecting that we go super fast above it. Okay. But if by any chance there is some kind of a big momentum, an amazing news that comes out, it's the end of the recession, inflation is dropping, amazing news in the crypto world or anything, and if you start seeing a big acceptance into this area and that we reclaim this with strength, don't short higher. For me, it's either you short in this area or you don't, because of this swift move down. Okay? But yeah, that's the next big level that you should have in mind. And that I have in mind for sure. And I'm just going to mark it in a very visible way. That's the area. Short, right there. Okay. That's the area that I would really be aware of. Should we reclaim this, but we're already very far away from that, then you have this high, this major high, also visible on the high time frame, visible on the weekly, for example. So, of course, you have the weekly level, the daily level, and you could envision an SFP of this high. And this is going to be also very key, because should you take this high, it would be the first sign of the high time frame, on the high time frame, so it would be the first sign of strength since we lost the 69K, in my opinion. Okay? Since we dropped from here, you had here a mini rise that ended up into a drop, and this is why for me here, this would be like the big level that we need to break, because we'd be fighting this huge trend if we take this level. Okay? But we're not there yet. So let's not talk about this. Let's take it level to level. Next level is the high of the range. If we reclaim this, it's what I showed you, 618 and everything, and then the high of the range, and then this area right there. And this should provide you with
this comes into play.
Yeah.
This comes into play only if we lose the range that we are still in right now. So it's a bit further.
If you mean if you lose it to the outside, if you break if you break out of the range, exactly.
Yeah, we need to leave the range to this setup to play.
Completely.
We're not there yet.
Yeah, we're not there, and what we're doing is, I mean, remember, Pierre, huh? when we dropped here in November, we said there was going to be a range, and the range is happening, and we are still inside of this range, and until we break it, I mean, this trade is amazing, but it could never happen, and we could just drop lower. Okay, so there's no need to think this is where we're going, I'm gonna buy here. No, this is not a buy. Even if we're already thinking we want to short this area, and even if you're saying, this is gonna be amazing, and it's a 10%, 11% move to the upside, I'm not longing here because I have no idea whether we're gonna go there or not.
Yeah,
no idea whatsoever. Okay.
All right. I think we're gonna cover the ES, but maybe tomorrow. What do you think?
Why I talked for a lot, right? How long?
It's been 1 hour now.
What do you think? Should we go a bit through the ES, because I think it's important. It's let's go through it, because every time we miss it. And if you have a bit of time, Pierre, to follow. I mean, first of all, do you have any things that you want to say regarding
inquiries?
Yeah.
No, you've covered it pretty well. everything's
So
perfect.
you have the same view on your
Yeah.
side as well. Those are the levels.
Yeah, but I really don't think. I mean, we could range for like 6 months here. Like there is no way to tell. And when we get out of this range,
Yeah,
we're gonna go ahead and do some setups to the upside or the downside.
exactly.
But for now, we are in the range, so like
Yeah,
we could still range for 6 months. Like
totally. I could
it,
totally see
this has
this.
got to be said because people when they see the setup out there, they're gonna say,
Yeah.
"Oh, this is gonna happen
No.
next week." No,
That's
you don't
very
know.
important what you say.
We don't know.
What you say is very,
Yeah,
very important. It's that this really, really doesn't mean we're gonna go there. It's just that we're prepared. In the same way we're prepared, whatever happens, to the downside, to the upside,
to the
we know
downside.
we know our
Yeah,
levels. We know our levels. Now it's true we didn't mark the levels lower than this range because we're in this mini uptrend inside of the range. So again, it would be losing a bit of time because should you drop from here to here, it's already a 10% thing. Okay, so basically we have our trade to the upside. Should we rise of 11%, and if we drop from 10%, we have also a trade that's waiting for us. So we're pretty much covered
yeah.
from the upside and to the downside. Okay, let's move to
Those
the
are zones, right? So you
exactly.
would have to wait for the price to get there until you get there. You don't have a trade basically.
And look at that. I'm on the ES, and the ES is pretty much the same. In my opinion, the
Yeah,
ES is not showing any sign of strength yet. It could come, but it's not showing a sign of strength that's telling you, okay, the bear market seems to be at an end. From a pure, I'm marking the levels right now as we speak. I'm just doing it
yeah.
fast. Monthly levels, monthly level, monthly level. Okay. And to the downside, let's mark it, but I don't think we're gonna get there. You never know. Up. Okay. So I erased everything from the ES as well, just to show you that you can redo it whenever you want. This analysis is not hard to do once you know what you're doing. Up. So yeah, what I'm willing to say here on the ES is that okay, we are seeing this uptrend, a bit of a retracement, and now going up again. Does it mean that we're gonna go there? No,
You could,
we could,
but
but
you could.
you definitely could. But right now, there's nothing proving you that you're gonna go there. If anything, what's being proved to you is that this is what's happening right now, right? That's for me. That's still more probable right now than rising up. Okay. But anyway, let's keep on marking those levels because the ES is very, very important for our analysis.
Yeah.
So that's weekly level. So we're creating weekly levels to the lower side, which is expected because we're an uptrend. To the high side, there is no weekly here. It was tapped. You see how tapped it was, but it was a crazy, crazy thing because not only it was tapped, and look at that, just to show you how the ES works exactly like Bitcoin. Look at this SFP. Look at what happened on the weekly time frame. Okay, you're at this level on the biggest market in the world, and you rised 5.6%. It's huge volatility for this market, just to take this high and then drop below the weekly, below this high and this high. That's a liquidity grab, like the biggest liquidity grab I've seen on the ES so far. So let's call this weekly. Do we have above? Yeah, we have one weekly above us, and that's actually going to be the key weekly level in my opinion. Okay, and honestly, I think we can stop it here. Weekly levels, monthly levels, a bit of fixed range pool from here to here, the downtrend. Okay, a bit of Fibonacci work here. Let's take it to the mega high. Okay, right there. Let's put our weekly here, our monthly here. Okay, that's it. We have our levels. Okay, you could go deeper to the daily, like very locally, to know where is the next daily level. You have one right there. Okay, and you have one exactly at this monthly level, so I'm not gonna mark it. One here, but I don't really mind, and then the rest is covered. Okay, so basically to the upside. So what's happening with the ES is that we're going to be hitting this point of control pretty soon. Okay, we're going towards it. This is going to be a resistance, the highest volume level of the past year. Yeah, past year. So this is going to be a resistance area for sure. Add a bit of Fibonacci to that. And you maybe have the 0.5 that is very well respected, a bit lower I think. Yeah, you have the 382. Okay. So what could happen is that actually you hit this point of control and just keep on dropping. Okay, but I would say the key levels that you have to keep in mind for this are the following ones. The point of control, definitely. So I would call this a key level. Let's put it that way. Key, puck, okay?
Yeah, to me, this is the level to reclaim if you want to see more upside on the ES.
Exactly, because I mean, so far we just been ranging inside of this like area right there. And by the way, if we should take like the full ranging thing, yeah, see the point of control is still there.
Yeah, that's the same.
That's the key level. That is the key. Okay, you have another one right there, but okay. So yeah, key level is here. Should you reclaim this, the next level to the upside is obviously this here, monthly and weekly. Okay, probably with a liquidity hunt, maybe. Okay, but this is the next level. And then the biggest thing of them all is this one right there.
Yeah.
618
SFP,
weekly,
618.
Changing the global market structure on the high time frame. This is the level to reclaim, in my opinion. Okay, this is the big level to reclaim. I mean, because you would be taking out this high, which is visible on the high time frame, hitting this resistance area, so you're gonna have lots of people selling around here, taking also this high and hoping that you keep on going up. That's you need a big push up to take that. Okay, because by taking this, back testing it and going higher, what you're basically saying is that we're going to go to the highs here. By doing this, you're saying, okay, the next real level, you have this monthly here, but the next real level is the all-time high, because you now changed this whole downtrend is now changed locally, and you can expect higher moves up towards where? Well, the next level is the all-time high. And this starts with taking this area right there. And that's it. To the upside, that's what we have. To the downside, very fast, do we have any interesting Fibonacci pulls? Come on. Okay, we do. We have this one right there. Let me just remove that. Let's see where the 0.5 goes. Nothing really interesting. You have the weekly, and yeah, that's actually pretty cool, because you have all this pocket of liquidity. So you have this area here.
Yeah.
Okay, so you could see something like this. And should this happen at the same time Bitcoin is also dropping to a support area, that would be amazing. So keep in mind that you have the three. So the region is 3761 to 3739. That's a support region. Okay. And the biggest one to the downside would be this one here, with potentially a wick to take that out. The value area low, could do something like this, and then you go back up. You still range bound inside of this, and you basically bounce of this area. Okay. So to the support side, 3761 to 3739. Okay, with the weekly level inside, or 3590 basically. 3590 is a good support area. To the upside, the key point of control, 3965, and even higher would be, but I mean locally, would be the monthly and the weekly level at 4094. That would be like the closest area of resistance. Okay, and should we get there from here, it's already a 4% rise. Should we take the highs, it's a 6% rise. Are we gonna get in the next week a 10% rise on the S&P? I doubt it. It could, but I doubt it. So yeah, that's basically it. And again, why do we do the ES? Because it's correlated with the Bitcoin. So if you see the ES hitting a support level, at the same time Bitcoin is hitting a support level, this is an additional confluence for you. It's as if you had another technical tool on the Bitcoin chart. And the same way to the other side, you're hitting a resistance while Bitcoin is hitting a resistance. That's an additional confluence. What happens if Bitcoin is hitting a resistance and ES is hitting a support is that this should be your first red flag on your short. Should you be shorting Bitcoin? You'd be like, okay, but the ES probably is going to bounce, providing a move up potentially on the Bitcoin. So take profits pretty fast. Okay, this is how you use the S&P levels to your advantage. The idea is to have additional confluences, or if you have red flags, take profits earlier, or even close your trade if you see an amazing reaction on the S&P. Nothing has happened yet on the Bitcoin. It could be a hands up that something is going to happen. Okay. And I think that covers it. Seems like we're moving up on the Bitcoin. Right?
Yeah.
Seems like we're moving up, leaving the value area for now. Yeah. Basically, that's what's happening. So let's see what happens at the 0.5, huh? That's what we have. The next level is going to be the 0.5.
Yeah.
Yeah, it's a 0.5. Yeah. That's what we're going to be monitoring today, I think, because there's big probability.
314.
Exactly. Yeah, that's the one. Let's see what happens here. We know that there's this inefficiency area, so we could blast through it or just hit it, lose the value area high, and then maybe you have like a short scalp to take. We'll see. But anyway, we'll be available with Pierre on the Discord today. So if you have any questions, just ask. Okay?
Yeah, we will.
Pierre, thank you very much. And everybody just trade safe. And thank you for listening. And yeah, we'll just tell you to next time. See you next time. Bye, guys.
Yeah, see you. Bye.
Bye-bye.